Welcome to Opal's TV. Today I'm in Singapore together with Kyle Davies. He's a co-founder and head of trading of Three Arrows Capital. Kyle, give me a bit of a background of yourself and Three Arrows.
I founded Three Arrows in May 2012 in San Francisco with a partner, Su Zhu. From a base of 2 people, we've grown the firm to 24 now in Singapore in 2 offices and are looking to open our European office this year. My background is I used to work at Credit Suisse. I started in 2008 in the exotic derivatives equity desk, and within 3 years I realized the opportunity set was really on the buy side and in emerging markets. So I decided to reach out to Su Zhu, found Three Arrows, and from there we really hit the ground running, growing the firm first in San Francisco, then in Singapore, and next in Europe.
So Kyle, tell us more about your strategy and how specifically do you approach the markets?
At Three Arrows, we look at emerging markets globally with a particular focus on cross-border market fragmentation. I think in general, emerging markets are going through a huge evolution right now in cross-border, cross-asset class, cross-product, but with an opening of borders. Markets that were opaque in OTC are moving to more transparent OTC, and we're seeing lots of new listings as well. In particular, we're looking at Brazil, Russia, India, China, Korea, and we're looking first what access is available to hedge funds, second, how we want to participate in that, and thirdly, what the trading strategy will actually be. So India would be a good example of this, where within the past couple of years you've seen offshore listings in the currency futures, you've seen an OTC environment developing, both onshore and offshore, and changing in quite significant ways, and you've seen a greater interest in exchange-traded instruments. So I think this trend will continue in emerging markets, particularly within the BRICK countries. China is another good example where we've seen the CNH spot trade 80-20 compared to the CNY NDF, whereas 2 years ago it was exactly the opposite. And recently, within the past week even, we've seen new listings in the product offshore. I think this trend will continue. It will transcend asset classes, it will transcend other markets, and we are positioned to take advantage of these.
Okay, Kyle, you're doing emerging markets. Explain us more, how are you different from your competitors?
We have competitors in each and every one of our markets, but I don't think there are competitors looking at emerging markets globally the way that we do and the way that we approach them. At Three Arrows, we have a huge focus on business development, which means market strategy and market access. And in the markets we trade, the market access is really non-trivial. It involves setting up entities, it involves setting up different OTC access, different listed access, getting involved with exchanges. It's a huge project, a huge investment, and it's something we take very seriously.
Please share with us some of the opportunities you are currently focusing on.
Three Arrows is an emerging market, alternative, opportunistic focused fund. And what that means is we trade India, we trade China, we trade Brazil, Russia, but mostly when there's volatility there. So during elections in India, during elections in Brazil, during sanctions in Russia, we're already there. The bottleneck at Three Arrows has never been ideas or capital. It's always been organically grown personnel. So we've grown the firm from 2 people 2.5 years ago to 24 today, and are looking to double that again this year with our 3rd office in Europe. We look at markets with disparity between onshore and offshore products. A good example of this would be Russia. In Russia, during periods of stress, the interest rates onshore and the interest rates offshore are not the same. It used to be that hedge funds would maybe not be able to participate in this trade so much, but with current regulation and with banks' credit lines coming under pressure, hedge funds are stepping in to take advantage of some of these trades. A bank may look to park cash onshore and trade the offshore against it. Someone like Three Arrows may look to do a managed statistical arbitrage spread, mean reverting, or trading, scaling in and out of levels in one of these spreads. With this approach, we have a systematic alpha in the markets, and with our managed style of trading, we have a trader alpha as well.
So what's the outlook for your strategy and your fund?
As a result of regulatory changes, banks that used to take advantage of a lot of these opportunities are coming under credit pressure and regulatory pressure, leaving opportunities for savvier hedge funds in emerging markets.
So Kyle, I'm in your office. You have a dynamic, a young team. Tell me more about your culture and how you're approaching your growth of the company.
We've onboarded junior, middle, and senior level personnel in all divisions. Every 3 to 6 months, the headcount grows by about 50%, and we go into, on average, 2 new markets. So what that means is we need to be organic, we need to be entrepreneurial, and we need to evolve with the markets. We've got a good footprint here in Singapore. The big focus this year is expanding not only in Asia, but in Europe and globally in emerging markets.